Kerry Quaglia from. He is the CEO of Home Headquarters, Inc. Home Headquarters, Inc. is a private, not-for-profit organization dedicated to promoting homeownership in Syracuse, New York, and has over 20 years experience in housing, lending, and community development. Because of Kerry's extensive residential housing knowledge, he is a regular consultant, speaker, and facilitator for public and private, local, and national neighborhood revitalization efforts, events, and initiative. Kerry is also a broker and a GSAR member. I can't say enough about Kerry, as I know him from many of the land bank accomplishments, many of the awesome things you do for the city of Syracuse, which is our nucleus for the full county. So appreciated. And I'm just going to leave it up to you, Kerry. Thank you.
Well, thank you very kindly for that, Nancy and Lenore, and certainly very glad to be with all of you here today. We'll give us just a few minutes to talk to you about what's going on at Home Headquarters, maybe what's new. And we kind of feel like there's no rest for the weary at Home Headquarters, because we have been invited into some other communities, and we recently opened up an office in Buffalo in the Larkin building. And we're opening up an office in the Capital District. And in both cases, we were invited into those communities because of the programming that we've been providing for many years in central New York. So that's very positive. But at the same time, we also understand every time I speak with the mayor or the county executive, the message is the same. There's a tremendous shortage of affordable housing in this community. And as a provider of affordable housing, whatever Home Headquarters has done in the past, we've got to double or triple those efforts going forward. And I'm going to be speaking about some of those today. But what I thought I'd do today is just go over a couple of programs that we have at Home Headquarters, just to make sure the real estate community is aware of it. I'm going to try to share my screen here. Let's see how we do. And let's see. Hopefully you can see our closing cost assistance program. And I'm not sharing anything with you today that isn't already on our website. So you can visit our website to get more specific information. This closing cost assistance is available in this program in the city of Syracuse. It provides up to $5,000 for first-time homebuyers who have been through homebuyer education towards their closing costs. And these days the closing costs can often run quite a bit more than $5,000. So this at least offsets some of those. These funds are federal funds. They come from HUD, Housing and Urban Development. They go to the city of Syracuse, and then they come to Home Headquarters. So they do have a HUD tag to them. And but HUD has approved this program such that it can be used with conventional mortgages. It can be used even with FHA mortgages. So as you have these first-time homebuyer clients who are purchasing in the city, just please remember that we have this program available. Homebuyer counseling is required. And, in the old days, it was sort of an impediment because folks had to go in person to the homebuyer education class. And obviously, after COVID, that's all changed. There's a host of online options now, so people never have to leave their living room to get homebuyer education. So that's certainly been possible. Now, we just got reloaded with funds on May 1st. So we've got enough funds, to probably do about 80 or so first-time home buyers. So as you have these buyers, please get them to us, and we'll have them fill out an application, and we'll get them approved. Now, there are some income limits associated with the program, and I'm going to try to share that here. Let's see what we got. Okay. And the reason I wanted to share that is because I've been doing this for a very long time, and these income limits are hot off the press. They were just made available by HUD on June 15th, which was just last week. And they have gone up more than I have ever seen income limits go up ever. And, we've been in an inflationary time, and everybody knows that incomes and rents and everything have been going up. So the income limits have gone up concomitantly. So as you see, the limit here at 80% to qualify for the program, folks would have to be under 80% of median. And in each of these categories, these limits went up just last week about $3,000. So for a 4-person household, it's a fairly generous $74,650. So I just don't want you to think that folks, may not qualify. Get the application to us, and we'll certainly do our best to qualify them. If there's any questions about that, you certainly put it in the chat. And the other thing that I wanted to bring to everybody's attention is our first mortgage program. I can see only about 25 of you at a time, but maybe by a show of hands, who knew that Home Headquarters provides first mortgage financing? Okay, a few of you, not everybody. I hope after today, everybody knows that Home Headquarters provides first mortgage financing. Now, we don't have a ton of it. We're not a bank. We're not a credit union. We don't take deposits. What we are is something called a CDFI, or Community Development Financial Institution. And that's a status that we get from the United States Treasury, because the Treasury realizes that there's groups like Home Headquarters throughout the country that primarily lend to low and moderate income folks and other disadvantaged communities. And what they do is they try to get us capital so that we can do more of that lending. So it is with that capital that we have a first mortgage program. We've projected this year that we can do about $15 million in first mortgages. The first mortgages are not limited by income. They're not limited geographically, but as a practical matter, if somebody has an 800 credit score and a back-end debt ratio of 30%, you wouldn't need to take them to Home Headquarters, right? You could go get financing at pretty much any institution. What we're targeting are folks that are low mod, but they don't necessarily have to be low mod, but folks that are sort of on the periphery. Maybe our loan committee likes to see a 640 credit score, a back-end debt ratio less than 45%, but they can make exceptions, and they do all the time. So we've helped people buy homes, but providing them a first mortgage, even if they had, say, a 580 credit score, if there was a good explanation behind that. So I'm just going to share again here, and let's see. So our first mortgage financing, we only require 2% down. We never charge PMI, so it's very affordable. I think our APR is very comparable with the market right now. It's 6.49. It goes up and down just like everybody else's rates go up and down. It's available, and we'd like you to take advantage of it. And again, particularly for those buyers that you say, I normally go to a particular bank or suggest that my client use a credit union or something, but this one is a little iffy. Send them to us, and we'll see what we can do for them. Or if you thought that the folks were mortgage ready and they got turned down by an institution, send them to us, as a backup, and we'll do our best to get them approved. Our first mortgage program really bleeds into something that we have done with land banks, certainly the Syracuse Land Bank, over and over and over again, because we have an acquisition and rehabilitation program. So we'll provide a first mortgage for somebody to purchase a distressed property, either from the land bank, but it doesn't have to be a land bank property. It could be a HUD property or an FHA or Fannie Mae, Freddie Mac, any sort of property that needs some rehab. And then we do an after rehab appraisal, and then we can provide, it's basically a 2-part loan, very similar for those of you that have been around for a while to the 203K program. That used to be a pretty robust program, but a lot of lenders don't offer it because of a lot of paperwork. We've kind of taken the paperwork out of the 203K program. We run it here at Home Headquarters. So we will help people who want to be owner occupants and purchase and rehab. And we're also helping a lot of investors who might be buying land bank properties and rehabbing them. So it's both available for owner occupants who would get an owner occupied rate, and then investors who would get an investor rate. Obviously, that's a higher rate. And for investors, we do require 10% down, whereas owner occupants only have to come up with 2% down. So, these are all sorts of tools in the toolbox, that we have: acquisition, and rehab. But one of the things I really wanted to talk to you folks about today is our new construction efforts. In the past, we've done some new construction. We've participated in the Mayor's Resilient Neighborhood Initiative, but it's sort of been a niche. One year we might build 7 or 8 homes. Last year we built maybe 10 or 12. And obviously, with the need for affordable housing in this community, the need for new construction is really being highlighted. For the first time ever, New York State has created a new program called AHOP, the Affordable Homeownership Opportunity Program. And I believe that Home Headquarters was the first applicant to this program. We have been approved with those dollars to build up to 40 homes in the city of Syracuse. And I'll try to share one more thing with you here. Let's see what we got. There we go. So what the state was looking for us to do is, to the greatest extent possible, to cluster the activity. And hopefully you can see a map of part of the city of Syracuse that sort of bleeds into Solvay. So this year, we will be building 3 homes in Solvay on Charles Ave. We'll be building 5 homes in Tipperary Hill. And then you see most of the effort in clustering has been on the south side, Elmwood. All told, we will build about 45 homes. We will have the funding to build about 45 homes. And I can't remember the last time that amount of homes was built in the city or the inner suburbs. Here at Home Headquarters, we don't do anything alone. We've got lots of partners. And I know Katelyn's going to be speaking to you later. But most of these lots were purchased from the land bank. Indeed, you're kind of seeing the full cycle, right? So there's been a lot of demolition done in the city of Syracuse over the last, say, 20 years. The land bank has, I don't know how many lots, Katelyn will probably tell us, but a lot of them are buildable. So we put in offers for clusters to the Syracuse Land Bank. And then typically, Katelyn and her staff will actually subdivide the properties, because we like to build on at least 50 foot of frontage when we're building a single family home. So they'll get the sites more or less shovel ready. We acquire them from the land bank, we engage contractors, and we're going to get these homes built. So very exciting effort. We think the new construction is the way to go. I've been in this business for 30 some odd years, and for 30 some odd years we've been talking about lead paint and how energy inefficient some of these old home rehabs are. And with new construction, you've got smart housing. It doesn't have lead, it doesn't have asbestos, it doesn't have radon. They're easy to maintain for these first-time home buyers, and we really think it's a direction to go. Not that we're abandoning rehab, certainly not. We're going to rehab about 800 properties this year, but it's certainly something that we want to add into the mix. And then the final thing maybe I wanted to share with you, which I hear every time I go anywhere these days, is I was selected to be on the Mircon Community Engagement Committee. And, it was a great honor. And everybody's asking, well, what's going to happen with the $500 million? Because there is $500 million that's been committed. And I think everybody on the committee has realized that it's first things first. And what we're developing is something called a community priority document, which is supposed to be a guiding star for how that $500 million will be allocated. And some of the themes that we've seen bubble up already as far as a community priorities document, I don't think it's going to come as a surprise to any of you, but it's workforce development and diversity in workforce development. And then closely tied to workforce development are educational opportunities. And then second, a provision for affordable housing, right? That's certainly something we've all got to keep our eye on, because as we have a need for more housing, and we're going to need much more housing in this community with Mircon, we're also going to have an increased need for affordable housing. So for every market rate type of home you provide, you've also got to have a provision for affordable housing. And that might include infill new construction. It might include rehab. It might include rehab of existing homes to bring them into, the new century. Another recurring theme has been expanding options for childcare, improving community assets like parks and that type of thing. So the plan is to come up with this community priorities document, and they use that as sort of the guiding star on how these funds will be allocated throughout the community. So in a nutshell, that's what we've got going on here at home headquarters. I don't know how you folks wanted to handle questions, or if there were questions in the chat.
Well,
That's
Kerry,
where we are.
Okay, there are questions. I'm going to hand it over to Danielle in just a minute. The homes that you are building, what would they sell for, or are they for rental? Are you keeping them?
Everything that home headquarters does by way of new construction is for owner occupancy. That's what makes us different from Housing Visions. Housing Visions does low-income rental housing. They primarily use low-income housing tax credits, and they work really closely with the land bank too. I think Katelyn has primarily provided the land for Housing Visions to do their development on. But everything we do is for owner occupancy. And I mentioned this program from the state. And for the first time, that provides a deep subsidy, because as you're building in the city, unfortunately, it might cost $400,000 to build a home, and it might be worth $175, or depending on the neighborhood, even less. What the state program does is it fills that void, it fills the gap. But everything that we build by way of new construction, and most of what home headquarters does anyway, is opportunities for owner occupancy. So every house we build will be sold to an owner occupant.
Yes, perfect. Are you using some of the electric in your homes, or still?
Well, when you get state money, you have to tell the state that you're going to do exactly what they want you to do. So with every one of those new homes, they're going to have heat pumps, which will provide both heating and cooling. There'll be no gas run to those homes as well. It's something that the state insisted on. They're going to have to also be well built. They're going to have to pass a HERS rating. So they will be rated by an energy consultant. And that just makes sense. You want the house to be affordable. You might have seen recently, we're constructing some homes in the near west side that are actually net zero. Now, those homes are super insulated. They are 50 in the walls, are 80 in the ceilings. And they have solar panels on the roof. So they're producing as much energy as the people will use. Obviously, that's tremendously expensive. We had a large grant from NYSERDA to do that. These homes, the next 40 or 45 homes that we're building, will not be quite that energy efficient, but certainly a lot more energy efficient than existing housing.
Great. Okay, Danielle, you might have some questions if you'd like to address them.
Yes, we do. The first question is, what are the income limits for the program?
And are we talking about the new construction?
Yeah, I love it.
It doesn't expand, so I'm not.
Well, for the closing cost assistance, I shared those. They're at the 80% of median. And again, they're on our website now. So the new construction is a little bit different, because what the state does is they have a sliding scale. So if you use a deeper subsidy, you have to sell to people under 80% of median. If you use less of a subsidy, you can actually sell to folks under 100% of median. So it's a little bit different. But generally speaking, when you're getting state or federal money, they're going to always have some strings attached, and some of the strings have to do with the income limits.
The next question is, this is a two-parter. Is the program just for Onondaga County? And part two to that is, can this be used with USDA Direct?
The AHOP program that we applied for is specific to Onondaga County, as a matter of fact, but for a couple of homes, it's specific to the city of Syracuse. And generally speaking, city properties can't be financed through Farmers Help.
Next question. How does someone get pre-approval for this program or pre-approved for this program?
Sure. What you have to do is go to our website, and I shared that brochure with you. And Kylie Miller handles our first mortgages. She's the original point of contact for first mortgages. So the first thing a customer would do is fill out our pre-approval application. At some point, it doesn't have to be initially, but at some point the person will need to go through home buyer education. But again, that's pretty easy to do right now. You can do that online, and then you set up a Zoom for a one-on-one where we go over the individual person's budget. Yeah, we do pre-approvals all day long.
Thank you. The next question is, does the buyer need to go through a class prior to getting pre-qualified by home headquarters?
They don't need to go through class to get pre-qualified. They do need to go through class before we can close. So at some point in the process, they're going to have to sign up for one of the many online options to go through home buyer education. And again, if you sign up online, it's great. The only thing is we also have HUD requires to be HUD certified a one-on-one. So we'll set up a Zoom or a Teams meeting or what have you for an hour for the housing counselor to go over the person's individual budget, and that has to be a one-on-one. But the answer is yes. But do you have to do it before the pre-qual? No.
Perfect. Will the sales of these homes be normal, i.e. through the MLS, etc.?
In the past, new construction has been sort of a very small niche, but we're expecting, because we're increasing the capacity and number of new homes, that they will be listed.
Okay, thank you. Will there still be income limit deed restrictions attached to the purchase and resale of new properties?
Yeah, that's another thing that the state insists on. So what the state will do, they're putting $150,000 subsidy into a property. So, you might build it for $350,000 and sell it for $200,000. They're not going to do that without some kind of restriction. So what they're requiring is a 15-year restriction. And I always tell our home buyers, it's not a prison sentence. That restriction is assumable. So all you'd have to do when you sell the property is find a person in a similar income position that you were in, and they can assume the balance of the year. So if you lived there for 7 years, you had to get transferred because of your job, you sell the property, the state allows you to recoup many of the proceeds of the sale, but then you just need to find somebody that is in the same income bracket, under 80 or under 100% of median, that would be adjusted for that time period, 7 years from now. It's a little dicey, but we do it all the time. We find people that are qualified all the time. So again, it's not a prison sentence, and you're getting a heck of a home for a relatively affordable price tag. But every time you use public money, and as taxpayers, we would want there to be conditions, right?
Yes.
Okay. The next question is, what are the price ranges for these homes being built?
We would expect that they're going to be, the low would be 150, and the high would be maybe up to 225,000. That would be the actual sales price after the buy down from the state. And that's what the state calls that. They try not to call it a subsidy per se. They'd rather call it a buy down. They're just buying down the cost of the home because the neighborhood conditions don't really allow a higher sales price. And, the reasons for that are rooted in all kinds of things like redlining and bad lending practices over the years and whatnot.
Mm-hmm.
Perfect. Next question, with rehab, can they be 2-family homes?
Yes, We do a lot of two-family homes, but they do have to be owner occupied.
Perfect, thank you. Let's see, the next question I have. Did you say that some of these homes being built in the city of Syracuse may cost 400,000, or did I misunderstand you?
Well, as an example, the energy efficient homes that we built on the near west side, yeah, they were $400,000. They're not being sold for $400,000, but I defy you to build a house anywhere that has R50 in the walls, R80 in the ceilings. It's heat pump technology. It has solar panels. Of course, those are going to be expensive homes.
Perfect, thank you. Okay, and this is going to be the last question for you, Kerry. Are you referring to the 500 million as money that the county was allocated a few years ago for the inland port, which was supposed to be shovel ready when the application was submitted?
No, we're not. What we're referring to is Mircon in the state of New York, and I believe some money from locally has put together about a $500 million pot of funds that is going to be available to do community improvements and to fill voids that are resulting from Mircon, moving into the territory, and obviously all the expansion that has to happen. And those dollars are going to be under the purview of the Mircon Community Engagement Committee. So it's totally separate from the dollars that were committed previously. This announcement was just made when the governor was in town in April. So this is brand new.
Mhm. These are all fabulous questions. We appreciate all that you do, Kerry. It's mind-boggling that you can get as many homeowners into homes that really need to be a homeowner. That we really appreciate all your efforts and all your involvement. And I thank you for today's informational education, and we will definitely see you more and more, I'm sure. Thank you.
Absolutely. Thank you all so much. And again, I agree, really good questions. So thank you.
Thank you. Okay, I'd now like to introduce our second speaker, which is Katelyn Wright. She's the Greater Syracuse Land Bank Executive Director. Katelyn was the founding executive director of the Greater Syracuse Land Bank, which was created by the city and county in 2012 to address tax. This was made so they could address tax delinquent, vacant, and abandoned properties in the city. She was founding president of New York Land Bank Association, Land Bank's statewide trade association, where she currently serves as treasurer. Katelyn, we'd love to hear from you right now.
Thank you.
Mhm.
Thank you for the introduction. And thank you all for logging in and your interest in learning more about what the Land Bank does. Let me see if I can share my screen here. All right. So like Nancy said, the Land Bank was established over 10 years ago now. At the time, there were 1,800 vacant buildings in the city of Syracuse and about 3,000 vacant lots. And that represented a significant percentage of all the parcels in the city, because there's only 40,000 parcels in the city. And about 10% of those were tax delinquent to the point that they could be foreclosed on. Many years ago, the city used to use tax auctions, and we found that we were getting a lot of slumlords from out of town that were coming into the auctions. They're buying a property sight unseen for cash for a pretty low price. And then they would get inside the property later and find that it was in really rough condition, and either they would walk away from it and it would end up back in the auction a few years later, or they might try to rent it out without making adequate improvements and kind of milk it for revenue as long as they could until it went back into the auction at a later date. So we thought it was, a good idea to stop the insanity and stop doing those tax auctions. And of course, that meant that collection rates were going to drop if there's no threat of foreclosure. So then to deal with that, the city started selling tax liens to an out-of-town investment company called ATF, American Tax Financing. They're a tax lien investor that bought from municipalities all over upstate New York, not just Syracuse. They would generally buy those liens for around 85 cents on the dollar, which helped municipalities plug their collections gap. But then we're basically selling to an out-of-state corporation the right to foreclose or not foreclose, and they were reselling these liens. They found that the properties weren't worth as much as they thought they were going to be worth, and so it wasn't always worth it for them to foreclose. They were selling liens on Craigslist and eBay to grandmothers in Washington State that were then calling me at City Hall asking, what do I do to foreclose on this tax lien? And it was just crazy. And then right around that time, thank God, the New York State Legislature in 2011 passed a law allowing local governments to create land banks. And our goal was to deal with vacant and abandoned properties using municipal tax foreclosure as a tool and a mechanism for us to get title and control of these properties and make a somewhat more rational system for assembling and disposing of abandoned property. You know, Syracuse, I'm sure most of you are aware, used to have a much larger population. Our peak was around 220,000 people in 1950. By 2010, we were down to around 145,000 people. So we just had a lot more houses than we had households to fill them. And with excess supply and lack of demand, housing values stagnated and in many cases dropped. And we've got a situation where it doesn't always make financial sense for property owners to invest even in basic upkeep and maintenance. So then we have deferred maintenance issues and properties deteriorate. And it became a vicious downward cycle in some neighborhoods. And so to deal with that, we wanted to take control of as many of these properties as possible. And you can kind of think of the land bank as a triage tool. So we take all of the city's tax foreclosures and some tax foreclosures that the county does as well, mostly in the inner ring older suburbs, like Solvay, East Syracuse, North Syracuse. And we triage them when they come in. So about 30% of the structures that have come to us are so deteriorated that we don't list them for sale. They go on our demolition list and we go out and we find grant money to do those demolitions. The other 70% are rehab candidates, and I'll go through what we do with those in a second. And then we get a lot of vacant land as well. And then we're creating more vacant land with the demos. So Kerry was saying that we've put together sites for them to build on. We're finally seeing demand start to turn around in Syracuse, which is a game changer for us. And with Mircon coming, we think there's just going to be more of that. And like Kerry explained, we want to see, it sounds kind of ironic, we have too many houses, but we want to see more new construction because the houses that we have issues like lead paint and asbestos and energy inefficiencies that Kerry was talking about. We just need to upgrade the quality of our units as well. And so all the new construction that Home Headquarters and our other partners are doing is a critical part of that. So we take those vacant lots and we try to assemble them together to make building sites. It's not uncommon in a lot of the neighborhoods where we work that when the homes were built, they were all built on 33-foot wide lots. Nobody had cars, they didn't need driveways. And so we do a lot of mixing and matching. We'll put 3 together and then divide them up into 2 building sites, that sort of thing, to make reasonably sized lots that Home Headquarters can build on, and people want to have a driveway these days, and they just want a little bit more room. If you're going to pay $150 or more for a house, you want to have a decent sized yard. So we spend a lot of our time doing that with the vacant lots. Here you can kind of see over time how the number of foreclosures that have been coming into the land bank has kind of ebbed and flowed over the years, but we've acquired over 2,000 properties in the past 10 years. And we've sold, this was a little bit outdated about 6 months ago. At this point, we've sold almost 1,300 properties in the past 10 years since we got started. A lot of those are side lots. So if we can't combine 2 lots together to make them big enough for building, and if there's, it's flanked by 2 occupied, well-maintained houses, there's not going to be an opportunity to combine it with an adjacent property. We'll offer it to both neighbors and either split it between them or sell it to one or the other, depending on who's interested, to give them a little bit more yard space, gets it off of our books, so we're not dealing with property maintenance anymore. And then they're getting it back on the tax rolls, and it should help, enhance the value of their home. So a large chunk of the properties that we sell each year are vacant lots. You can see those in the teal color, and then an awful lot of residential structures. Most of the structures we sell are just to regular buyers, might be people that you work with. About 50% of them end up becoming rentals and 50% owner occupied. On the rental side, the vast majority of our buyers are local investors that live in Syracuse or Onondaga County. For the owner occupants, it's about a 50-50 split between buyers that are purchasing to renovate and live there themselves, or flippers that are renovating and reselling it to an owner occupant. But I guess I should just take a step back. I said 70% of our homes are renovation candidates. You should think of them all as extreme fixer-uppers. These don't just need some cosmetic upgrades. It's not just a dated kitchen that we're worried about. These usually need a lot of investment to make them code compliant. All new mechanical systems, windows, siding, new roofs, sometimes structural repair. So our sales prices are generally pretty low. You'll see here that our average sales price last year was about $18,000, and a buyer could expect that they're probably going to have to put $80,000 to $100,000 into renovations. A handful of our sales, we had some outliers that were on the upper end that were in better condition, and those really do make up a big chunk of our sales revenue each year. About all of the sales revenue we bring in each year, it's generally between $1 million and $1.5 million each year. That covers about half of our operating expenses. So the work that we're doing loses money, and if it could make money, then we wouldn't need a land bank. We created this land bank, and it's a local public authority and a nonprofit. It's exempt from property taxes and a lot of transactional fees, so that we can kind of operate as leanly and inexpensively as possible. Because we have such a big inventory, our unit costs for maintenance are pretty low. And all of that helps us to do this work efficiently, because we're having to do it with a lot of public money and taxpayer dollars. So if half of our revenue comes in from sales, the other half is direct support from the city and the county. And we think it makes sense for them to make that investment because, you know, for a little bit of money they put into the land bank each year, we've sold 1,300 properties that are back on the tax rolls, generating close to $2 million a year in property taxes. You know, all those renovations are generating sales tax and local wages. And, you know, just by eliminating vacant and abandoned buildings, we're helping to stabilize the home values of all the surrounding neighbors who have been kind of negatively impacted by a blighted home next door is going to drag down their home value. They're being kind of robbed of an opportunity to grow home equity, and we're trying to remedy that. So these are the homes that we've sold so far. You know, Kerry was explaining that this is kind of a record year for them, that they're able to build 40 houses. It was never like that before. There was usually enough funding to do maybe 1 or 2 dozen homes a year. So our model, where we sell most of our properties just to regular folks who are local buyers, that was designed to kind of crowdfund the scale of neighborhood revitalization that we needed to do. We could do 1 or 2 dozen really good primo renovations or new constructions using grant funding, but we're looking at 1,800 vacant buildings. So we needed to really scale up the number of projects being done each year in order to make an impact. And we've done that by selling them low so that our buyers will come in and invest their money in renovations, just because there's not enough grant money to go around to do those renovations. And it's working. We're leveraging over $45 million in private investment so far in renovating these buildings. And I want you to look at where those projects are happening. South side, west side, a dense cluster on the north side. It matches up, and this is, you know, where we've sold, where we've acquired, and where we've done most of our demolitions. And it's not a coincidence that it matches up with this redlining map from the 1930s. So the red and yellow areas were where it was difficult or impossible to get a federally backed mortgage. And that really, I think, was the starting point of that downward cycle that I was describing earlier. If you can't get financing to maintain the home, it's going to deteriorate, it's going to decline in value, it's going to negatively affect the neighbors' home values, and it just cycles downward out of control. And so we're still today cleaning up from a legacy of these policies. I mentioned about half of our homes get sold for owner occupancy. Here's one that was done by one of our private buyers. We do have a discount program for public employees that's mentioned here. Our list prices are already pretty low. If you're a full-time employee of the city, the county, or the city school district, and you're buying a home in the city of Syracuse to be your primary residence, and you promise to live there for 5 years, you can get half off the list price up to a maximum discount of $20,000. So if it's listed for 30, you could offer 15. But if it's one of those higher end ones, say it's listed for 70, you can get it for 50. This is one that was done by a couple that were done by flippers last year that turned out very well. Just kind of showing you that $45 million of private investment. What does it actually look like when you're on the street? And then these were a few that were done for rentals by local buyers. Those 30% that I said are demolition candidates that we don't bother to list. Unfortunately, we can't get to all of them immediately. So some years we've had 200 properties in our inventory just sitting there on the demo list. If a competent buyer who has the skills and the financing approaches us and they want to save one of those, we will entertain an offer as long as they show us that they have the capacity to do it. And this is one that somebody rescued off of our demo list. In 2021, the city gave us $5 million from their ARPA federal allocation. We used a big chunk of that on demolitions, but we're also starting to spend a lot more money on stabilization. In the early years, we sold off a lot of stuff that was in much better condition, and now our listings are frankly looking pretty rough. And so we're using ARPA funds to do stabilization. We've spent all of that down, and now we just got an allocation from New York State to continue this program. And that work would include things like foundation repair, structural repairs, new roofs, windows, siding, so that we can put together kind of a stable, watertight, decent looking shell and turn it over to our buyers to come in and finish off the interior work. Kind of give some immediate improvement for the neighbors so that they don't have to keep looking at this blighted building. And if we invest $50,000 into it before we sell it, that might be what it takes to make that project financially sustainable for the next person to actually get a return. Over the years, we've used a huge variety of different sources of funding for demolitions to catch up with that and deal with this blight elimination. And we just got another $1.8 million grant from the state, so we're going to keep that going. And this is how some of those properties look prior to demo. I mentioned ARPA. We do have some larger or more, well, this is, I'm sorry, just some pictures of what the ARPA stabilization would look like before and after. And keep in mind, whoever buys this is still going to have to go inside and do all new mechanical systems and new kitchens and bathrooms, and there's still a lot of work to do. This is a two-family that we did some stabilization work on. We did a new roof, siding, windows, rebuilt the porches that were falling down, and Home Headquarters actually bought this, and they're going to come in and finish out the interior and then sell this two-family to an owner-occupant. That's a little unusual. Usually those stabilized properties go to just regular folks. And that's most of what we do is single and two-family wood frame detached houses. That's kind of the vast majority of our work. But we also get some real oddball properties like this giant mansion on Western Onondaga Street. This was built as a single family home back when people were building mansions on Western Onondaga Street. And later it was turned into a funeral home, and it had been vacant for at least 10 years before we got it. And we found some buyers that are interested in turning it into a commercial mixed use property, but they can't do so without a lot of grant support. And so because the land bank is tax exempt and we have relatively low carrying costs per property, we're able to be a much more patient seller than most sellers are. And so with a complicated project like this, where they're putting together historic preservation tax credits and 4 or 5 different sources of grant financing, we can wait a year or more for them to close and allow them to get all that lined up. And if they don't, then we don't have to close and we can put it back on the market and find somebody else. But the fact that we're able to operate so inexpensively allows us to do that and to take the time and effort it takes to deal with some of these big oddball properties. There's also a property here that right now we own that's vacant land right across from the Price Right grocery store on South Ave. And that's an example of the site assembly that we're doing. So we're putting together a lot of 50-foot lots for Kerry and Home Headquarters and Housing Visions to build 1- and 2-family homes. But we're also putting together some really big parcels for projects like this. This is going to be a 65-unit apartment building that's going to be affordable housing right across from the grocery store there. This is another one of those unusual properties, a former church on South Salina Street. We've had this buyer under contract for probably close to 3 years now, and she's diligently working on piecing together the financing and raising donations to make this project work. And they're planning on turning it into an event center because churches are hard to repurpose. They have weird floor plans, and oftentimes there's historic restrictions because they might be landmark designated. So we're patiently working with her to make this project take off. And here's some other site assembly for really large projects. This property here at the corner of Geddes and Seymour is going to be a commercial mixed use building with a commercial on the ground floor and 18 apartments upstairs. These three here are smaller kind of row house type structures between 4 and 8 units each, I think. And then we've assembled this whole side of the 300 block of Delaware Street. It took us many years to do so because we kind of get a checkerboard of properties through tax foreclosure, and then we work on filling in the gaps in the checkerboard. And so it took us, quite a few years to put this together, but this is going to be a 28 unit apartment building right here on Delaware Street. And this took a lot of tax foreclosures that we were patiently waiting for, a couple of grant funded demolitions, and we've started getting grant funding from the Environmental Protection Agency to deal with contaminated sites. That's kind of a newer thing that we've gotten into. And we're having to do some testing here because this block used to have an auto repair shop on it that we had to demolish. And this is what the buildings they're constructing that are going to fill in those gaps. This is what they're going to look like. And I'm going to skip ahead to talk about brownfield properties. There have been a lot of vacant and abandoned, potentially contaminated sites like this in the city and really all over Onondaga County for quite some time. If people suspect that there's contamination, it scares off investors and then they just sit there. Primarily, it's dry cleaners, gas stations, and auto repair shops. But we have just spent down our first EPA grant, and we've just been awarded another one to do environmental testing. And so we're working with the city and letting them go ahead and foreclose and convey these properties to us. And then we can use that testing money to figure out the extent of any contamination that's there, deal with some of those kind of unknowns that are scaring off the developers. And either we'll find out that it's not that bad and we can give them a scope of work for what it's going to take to get a clean bill of health from the DEC and move forward. Or it sometimes is that bad, and then we have to go forward and apply for some cleanup dollars. But either way, it kind of fits into our mission of taking these abandoned properties and triaging them. And I mentioned side lots earlier. We also lease a lot of land for community gardens that if it's not an appropriate building site. And this is just an example of some assembly that we've done for home headquarters and the homes that they've built. You can see all these little lines show how we've changed the lot lines and had to move them around to make them into building sites. And we also had to do, I think, 9 demolitions in this area to clear the way for them so they'd have shovel-ready sites. Similar work with other partners like Jubilee Homes, and Onondaga County Community Development is actually doing 10 houses now on Furman and Kennedy on lots where we've similarly cleared the way with some demolitions and lot line adjustments. And because we have a lot of stuff in our inventory, we might as well make use of it while we have it. So we do make all those properties available for training for code enforcement staff, building permit staff, and for police and fire so that they can have real world training environments. And here they are training their dogs that smell for accelerants. So after an arson, the dogs are part of their investigation team to see if somebody deliberately lit the fire. And we also obviously have to spend a lot of money on property maintenance each year. I think that's the long and the short of it, and we'll open it up to questions.
So Katelyn, I'm gonna have Danielle read some of the questions. Some are duplicated, but I don't think people realize how extensive your organization reaches out, how it just provides housing to people that never had the opportunity to rent properties or own. I know that some of the people bidding on the homes, they do have to prove to the land bank board of directors that they can do the job. They have to have monies. They have to have some way of some idea of how construction works, or they have to have someone who would be the contractor. So these homes are not just sold to anybody. That person is usually vetted. Am I right?
That's absolutely correct. I mentioned how we didn't like the auction process earlier because we were selling properties sight unseen. Not only does the buyer not know what they're getting into, but the seller hadn't been in the building. The city hadn't been in there. So we had no idea what the property needed. We couldn't vet the buyers to see if they had the resources to fix the property. Because we take title, we go in, we clean out all the trash and debris. We have a construction manager on staff that puts together a scope of work and a budget showing what's needed to bring it up to code. And we won't sell anything sight unseen. You not only have to read that scope of work, we also want you to physically see the building so you know what you're getting into. And our buyers, when they submit an application, they have to show us that they don't have any other tax delinquent properties. They don't have properties with code violations in Onondaga County. And for this specific property they're applying for, they have to have the skills and the financing needed to bring it up to code. And they are expected to do so within a year of taking title.
Or we take it back.
Yes, when we convey it, they sign a document we call a development enforcement mortgage. It's just the tool that we use. I don't really think of it as a financial obligation. They're not going to pay us back, but we have to attach a dollar value to it. So we put a lien on the property, and the document basically says you're going to complete the attached scope of work within a year. Otherwise, you go into default and we can foreclose on the mortgage. Of the 1,300 properties that we've sold so far, we've only had to take back maybe 24. So generally speaking, the screening process is working, and by making sure that they have the resources up front, that's what we want to avoid having to foreclose down the road.
Danielle, do you have any questions that you'd like to see in the chat?
Yes, there are a few questions in the chat, so I'll start with the first one, which is, why do you advertise a property for $9,000 when it needs $80,000 in repairs and cannot be purchased unless the buyer has $89,000 to show in cash? Why not advertise as $89,900?
It's a good question. 9,000 is literally the asking price, so it seemed a little disingenuous to advertise it any other way. We put in the listing notes exactly what they're going to need to show in terms of proof of financing, and we attach that scope of work. So if they do any additional reading beyond just the list price, they'll quickly figure out what's going on. But it just seemed the most honest to me to put the literal asking price as the list price.
I think this question kind of goes in line with that then. Most low-income home buyers wouldn't have that kind of money to buy one of these homes. Can they purchase the for sale price and get grants and loans for their repairs?
Yeah, you can definitely use grants and loans. And we don't expect people to have this much cash on hand. Most of our buyers don't have this much cash on hand. So their proof of funds can be a pre-approval for a construction loan. If they have a firm commitment for grant funding, they can also use that as proof of funds. Although there's kind of a chicken and the egg there where you usually can't get the firm commitment until you actually have the property under contract. So if we've been speaking to the grant funder and we know that they're eligible, sorry about that. If they can get a firm commitment within 30 days of getting under contract, then that can count as well. That said, a lot of low-income buyers that might be relying on grants don't find our properties very attractive because I was saying they're in really rough shape. So if you haven't hired a contractor before and supervised them to do a major gut renovation like this, it's pretty difficult for this to be your first time doing it. You are paying rent somewhere else. You probably have a full-time job, so you can't be watching your contractor all the time. It's just not for the average owner occupant buyer who doesn't have any experience. They certainly find it much more difficult. People who are contractors who buy from us or who've done flips before, it's much easier for them because they know what they're getting into. And so that's a big part of why we're focusing more of our energy on working with home headquarters to put more move-in ready stuff on the market out there at an affordable price through their affordable housing programs. Just because these are really daunting projects for people.
Okay. Next question. When you show the necessary repairs and the estimated cost, isn't it true that if a buyer who purchases the property can do the necessary identified repairs for less than you estimate, is that okay as long as the work is completed to your requirements? Many buyers are under the assumption that they must spend that amount.
That's also a very good question. So we want to see up front that you have access to that financing. So let's say you had an accident and you can't do the work yourself and now you have to hire a contractor. We want to know that you have the resources to go that route if you have to. But that's kind of worst case scenario. So if you can do a lot of the work yourself and over the course of the year you save yourself a bunch of money, good for you. We're not going to check your receipts to see how much money you spent. We're just going to check at the end of the year that you did everything on that scope of work. And we're going to use that as our checklist. If you've done it all, then we remove our lien and you're good to go.
Okay. Thank you. The next question is, why aren't the listings on the MLS?
We did that at one time and found it to be a little chaotic when we first got started. And we were kind of flooding the MLS with these homes that were in extremely rough condition. And because they're not move-in ready, we're really kind of targeting a different type of buyer than most of you guys are. It just didn't make sense for us to put them on there.
Okay. When can we submit candidates for the ARPA funding?
All of that funding has already been spent down. We do have a little bit of additional funding from New York State now to do something similar, and we'll do probably 10 of those stabilization projects this year. But those are all going to be properties that are in our inventory.